Well, welcome back. This is Stocks to Watch as we discuss significant news updates on Realbotix Corp, a company designing robots for human interaction, trading on the TSXV under XBOT and the OTC under XBOTF. This video is disseminated on behalf of Realbotix, and we're privileged to be joined by Andrew Kiguel, Executive Chairman and CEO. First and foremost, welcome back, sir.
Hey, Kyle.
Such a pleasure to get you back on. And I mean, Realbotix just announced a transaction with the NASDAQ-listed Onconetix. I mean, can you kind of just break down and explain what motivated this transaction and how it's structured?
Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Yeah, sure. I think there's a little bit of confusion in the market around that, which is why I think this is a good video to get out there. Our underlying goal is always to find ways to create shareholder value. And I think we found a way to do that. I've always been very vocal on our desire to move to the NASDAQ. That's in order to access new shareholders, institutional and retail. But as a standalone entity, we don't qualify for that. We'd likely have to do a big share consolidation. There's be a big raise attached to it. And so we've tried to find sort of what are unique ways to achieve those goals. And I think we did that through this transaction in what is really a reverse takeover. It would be us taking over a NASDAQ business. And what it accomplishes for our shareholders is the exposure to NASDAQ, limited dilution on new capital, and zero share consolidation.
Yeah, you gave a little bit of insight there, but can you go a little bit deeper on how Realbotix investors are impacted by this transaction? Is Realbotix disposing of any assets or any other details?
Yeah, so let me get into the sort of how the structure works because I think that's very important. And I think part of the confusion is around the name. So Realbotix Corp is the publicly traded company, which is Canadian as a Canadian company. So that's Realbotix Corp. And within Realbotix Corp, we own several subsidiaries. Most of these subsidiaries are structured that way to separate out different divisions. The two main divisions that we have, one is called Realbotix LLC. So I think that's part of the confusion. And the other one is called Abyss. Abyss focuses on our direct-to-consumer business. It's internet sales, focus on adult products. Realbotix LLC is where we are sort of creating and developing our AI and our sort of the balance of our robotics products. And so what we are essentially doing is taking the Realbotix LLC business, the commercial business, and we're transferring it to this NASDAQ shell called Onco or Onconetix. In return, we are just receiving the shares back. And so we're not losing anything as investors or as shareholders. Remember, my shares still reside at XBOT Corp, the parent company, as does everybody else. That's the publicly traded company. But we're basically taking an asset that we owned as a wholly owned subsidiary, and now we will just own it via shares in a NASDAQ listed company. And so we're able to achieve those goals. We get that NASDAQ exposure. We don't have to do a share consolidation. And then one of the positives is that there's going to be cash on the balance sheet of this business. And so we're receiving a NASDAQ vehicle, we're receiving cash and ownership and control of that vehicle that will all reside within the existing public company. And this is all again being done without a share consolidation. No cash leaves the business. Everything remains the same. The existing Realbotix Corp shareholders don't have to do anything. The value will all just naturally accrue, assuming this transaction closes, of which there's a few different events that need to occur in order for the deal to close.
Yeah, this sounds pretty beneficial. Speaking to a timeline, if you have any at all, when would this transaction potentially close and what happens next?
Yeah, so there's a few things that need to happen. There's a few approvals that need to happen. One is from the regulators here in Canada. The other is from regulators in the US. And then Onco needs to have a shareholder vote in order to approve the transaction. Now, they have valued our business at $100 million. So I think in some sense, that's a positive. Again, I think the market overlooks some of these things. Number two, as a shareholder of Realbotix Corp at the parent company level, this is why we shouldn't actually care that much with respect to what happens at Onco. At closing, we still get back the number of shares that corresponds to our ownership, which is going to be at a maximum 90% and at a minimum 75% corresponding to the cash, and the deal will still come with cash. So we will have certainty on dilution and certainty on cash, regardless of what happens at the Onco level. So I know yesterday Onco shares traded down, which for some reason ended up having Realbotix shares trade down. And that doesn't make any sense. Ultimately, we're doing this deal for the NASDAQ vehicle and the cash that's available there. And those are the key things that are important to us. And I think that's where our investors should be focusing on. We're not losing anything. We're just moving the ownership from it being a wholly owned subsidiary to now we will own stock in a publicly traded NASDAQ vehicle that we will control.
On that, Andrew, I definitely appreciate your time today as we pass it off to the viewers. We'd love to know what you think in that comment section. If you'd like to learn more about Realbotix, of course, we'll leave the links in the description below, and consider subscribing for news catalysts like this as it comes down the wire. Of course, we'll bring it to you here. And on that, as always, we look forward to catching you in the next one.
Thank you.